Focus. Ideate. Innovate. Enable. Standard Chartered and CNBC-TV18 present India on the Move, Season 6.
Hello and welcome to Season 6 of Standard Chartered and CNBC-TV18 present India on the Move. I'm your host Gautam Srinivasan, and today's focus of discussion is accelerating green financing in India. With me are three leading voices from the industry to talk about how the finance sector plays a catalyst role in India shifting to a green economy model, and of course the drivers needed to push up India's green quotient. Our speakers on the panel include Lakshmi Iyer, CIO for Fixed Income and Head of Products at Kotak Asset Management; Alan Rosling, co-founder and director at eCube Investment Advisors; and Ankur Khurana, Managing Director for Client Coverage at Standard Chartered Bank. Everyone, thank you so much for joining us and looking forward to understanding how India can sort of up its green quotient. But let's get the broad pointers out of the way first. Ankur, we'll start with you. Why do banks need to get involved with climate action, first of all? What's the rationale here?
So I believe, Gautam, climate change is going to present new challenges for the financial sector as well as provide new opportunities. And hence, banks can't stay away from it. You know, banks can leverage their global network of clients, which includes governance, which includes large corporates, MSMEs, retail sector, to raise awareness, to collaborate with them, to engage with them, and even do policy advocacy to encourage more investments in climate change. And more importantly, banks have a massive role in mobilizing capital. We know trillions of dollars are required to move towards a net zero economy. Even at Standard Chartered Bank, we have our footprint in 10 in markets across Asia, Africa, and Middle East, some of which will get impacted very badly through the climate change. So we've gone ahead and said we'll commit $300 billion to be mobilized towards climate change no later than 2030.
All right.
And that's the case for most international banks. I don't think it is a choice anymore.
All right, not a choice anymore. Taking some of the pointers which Ankur mentioned and coming to you, Lakshmi, in terms of unlocking the opportunities as India transitions to a net zero economy. She said trillions of dollars. According to the World Economic Forum, within 2030, $1 trillion worth of impact is expected to come in, 50 million jobs added. So broadly from a financial sector perspective, the catalysts, the drivers for India kind of moving to this green economy model. Your thoughts?
Clearly, there's no two ways about it that, climate change is the new digitization. And in some sense, there is a lot of merit to actually leapfrog into this initiative sooner than later. Are we already part of the bandwagon yet as a nation? That's a question which says the glass is half full or glass empty. I continue to be an eternal optimist. So therefore, I see there are a lot of opportunities within the financial services space to be able to unlock this potential. A, as a financier, B, as an investor, C, as probably a lender, and of course in the entire ecosystem to try to be able to achieve that objective in a more inclusive manner. So you have on one side, you have financial inclusion. This is in some sort of, being that catalyst or that strong change towards this climate change initiative, which is, I think, inevitable for a country like India, which is a little bit under 20% of the total world's population, and over 70% of our energy consumption is still fossil fuel. So I think it is, a need of the hour which has to be done as of yesterday.
All right. Alan, let me come to you. When I look at green finance flows, although they've risen 150% in 2019-2020 to $44 billion, the issue is that India needs $170 billion per year if we look at the NDC commitments under the Paris Agreement. So when we look at green finance flows into clean energy, when we look at, say, the circular economy, energy efficiency, what are the drivers, according to you, needed for pushing up these numbers, so to say?
Gautam, first of all, the numbers you quote in terms of the NDCs is only the first step. That's by 2030, which is just around the corner. If you look at the Honourable Prime Minister's commitment to get to net neutrality by 2070, that would be $10 to $20 trillion of investment requirement to transform the Indian economy. And frankly, it's in all of our interests that India takes a lead on this, because we can see the negative impacts of climate change. But on the other hand, we can see the opportunities for consumers, but also for companies, for making these investments and making the transition. So just personally, I've just bought my first EV. I'm saving at the moment a fortune on, the gas charges in my car. So if you multiply that across the economy, we need consumers to be making similar decisions. We need particularly corporates. So of the $44 billion you talked about, only about 7% is being invested in corporate balance sheets. And Indian companies, I think, we believe at EQ, have the primary responsibility for leading this. The banks will follow. The funds will flow to where the demand is. And the clever people of my two panelists, Lakshmi and Ankur, they will follow the opportunity. But if corporate India takes the lead for its own interests in terms of reducing cost, reducing risk, and offering better products to the consumer, then the banks will follow and the green finance will follow.
So where are we right now, Alan, in your opinion?
We're just at the beginning. I mean, the great news is I think the government of India has taken a real lead. So I was an early mover in the solar business 15 years ago, and the progress we've made in solar has been tremendous. It's partly the technology, which has made such a transformation, and the cost, but it's also because of the very long-thinking policies that the government has come up with. And the same thing is now happening in transportation, where EVs, particularly commercial EVs, are now extremely compelling. But we need to spread the same thinking to other sectors, particularly to housing stock and energy efficiency.
And in terms of incentives, because when we look at, say, the manufacturing sector, the production-linked incentives work, in terms of this area, banks are seeking sort of priority sector status to improve credit flows. Your thoughts on that, Alan?
I think that's one small step, but I think, every little step is helpful. If you're making a journey of 1,000 miles, every step takes you towards the objective. But critically, we need to persuade corporates and MSMEs that it is in their interest to make the transition, to replace that pump, to replace that air conditioning unit, to offer a product which has lower energy consumption or intrinsic in the product, so that our green footprint becomes more green and our carbon footprint reduces. After all, we are going to grow as an economy. So if India is going to grow at 8, 9, 10%, energy intensity will reduce, but the total carbon is likely to creep up unless very radical steps are taken throughout the supply chain.
All right, Lakshmi, let me get your response to that. It's kind of like a chicken and egg situation, because you want the corporate industrial story to mature, and then the banks can come in to invest. But again, the complaint is that, the flows, the green flows which are coming in, they're kind of restricted to select sectors which have achieved maturity and not to the early maturity stories which are coming about. But for that ecosystem to grow, those bets need to be taken. So what are your thoughts and your response to what Alan has mentioned?
I agree totally, but unfortunately, yes, it is a relatively very nascent market in India. Though if you look at the numbers, we show 300-400% kind of growth as far as issuances are concerned. But these are all on low bases. Out of the total bonds outstanding in India, less than 1% would be attributed to green bonds. So that's number one. Number two is the capital markets in India for, say, corporate bonds are largely, with the banking system, and who are largely, a buy and hold kind of investors, or they are active on the loan market route. And the natural port of call would be therefore to seek the more established players. And typically, if you see, utilities are very large issuers of green bonds, for instance. As you go down the chain, as you wake up to more realization, and you see government also is making some initiatives, as is the regulatory bodies, to be able to see this further. Because if you have a target in mind, and if you don't work backwards and do it today, and you don't try to achieve this all-inclusivity, it's not going to be possible. So I think the first move has to happen predominantly with the banking system, because they're the large lenders and they are the anchors of supporting an initiative like this. Once that starts off, you could have impact funds, you could have pension funds, provident funds, you could tap into the global pool of capital, which is humongous. There are certain things which need, kind of fixes. So you need to have your nuts and bolts in place to ensure that happens. So it's not going to be like a bed of roses walk when you're trying to fund this initiative. It is a Herculean task, but trust me, it's not impossible.
We'll discuss more of that. Green bonds, what does it mean for, say, small businesses, and what does it mean for regulators? But that's on the other side of this break. Stay tuned.
Standard Chartered and CNBC-TV18 present India on the Move, Season 6. Standard Chartered and CNBC-TV18 present India on the Move, Season 6.
Welcome back to the 6th season of Standard Chartered and CNBC-TV18 present India on the Move. And of course, the topic of discussion is accelerating green financing in India. Resuming that flow of thought, as we said, it's an ecosystem play rather than an individual play. Ankur, take us through the scope of green bonds, because it's been in discussion, but there's been a lot of chatter as to whether it's working or not. So take us through how green bonds is enabling cheaper access to capital for a lot of the companies.
So, Gautam, I think as a world economy, we have just touched the tip of the iceberg when it comes to green bonds. $102 billion of money has flown into ESG funds for purely deployment in green and sustainable bonds. Earlier, our debt capital markets, only 2% of the issuances was green and sustainable. That's moved to 12%. But I think that needs to move up substantially. But that also goes to show there is so much in the denominator that can be tapped. And this capital question you might ask is it cheaper than the regular source of capital? I don't have any data to prove that. But anecdotal evidence says that this capital is sticky, it is long-term, it helps you in diversifying your investor base. In one of the most volatile times that we've had in capital markets, a Saudi sovereign wealth fund has managed to go ahead and raise $3 billion from the market purely in green bonds. And guess what? One of the tranches is 100-year-old.
Wow.
So that can happen with the kind of ESG funds that is already into play. We just need to find the right way to tap it and not worry too much about what is the quantum of basis points that you will save in each of your issuance.
All right, but this also brings to me the question as to, the pie within the pie, Lakshmi, because when we look at, say, the sustainable debt market, while it has seen a sort of a six-fold growth last year, I think it's around $19.5 to $20 billion. The question is, it's still a tiny fraction of the overall sort of debt market. So the factors required to scale up this market, what are your thoughts on that?
What we require is to broaden the investor base. That's point number one. So have more and more different participants to come into this fray. As Ankur said, 100-year bonds. Now, who can be potential investors of 100-year bonds? Could it be mutual funds in India? Maybe at the current juncture, we don't really have that kind of longevity of investors coming into the funds. So maybe they could be the last mile to be touched at the current juncture. But certainly the terminal benefit funds, the pension funds, insurance companies, over and above banks who are potent lenders, also tapping into foreign pools of capital, either through the domestic fund route or issuing these monies outside of India, issuing a dollar-denominated bond, which is pretty much a fancy for investors outside India. Of course, there is a currency risk which one needs to keep in mind, but I'm keeping the caveats out of the picture right now. So these are sovereign wealth funds, for example. They are very, very strong believers of the concept of ESG and therefore are very happy to broad base their own investment bouquet. So that's required. Secondly, you also require a regulatory framework, to ensure that, these green bonds, indeed, the underlying projects have a different scrutiny mechanism, for example. It might be there, but it probably needs to be furthermore entrenched and made aware to the end investor. Otherwise, to Ankur's point, and you rightly alluded to, how do I as an investor say with certainty that, this is a green bond, so it requires a greenium, not like a premium, so it has to trade better than the rest of the bonds. And it is always the issuer's birthright to ask for a lower rate of interest. So I think that can be, a definitely conflicting area. So I think some bits of this and a lot of awareness also, even in the institutional fraternity, it's not that all of them are aware of why one needs to, probably participate in the green bonds or, have a more inclusive portfolio and broad-based and include. So I think globally, the concept is extremely popular. In India, If you look at ESG funds, for example, in mutual funds, it's only in equities. It's just about $3 billion, growing in size, but just very, very at its nascent stage. We yet don't have thematic funds in the fixed income side. Maybe it's time to go for one.
Ankur, let me bring you in, because India has been a relative latecomer into the global, sort of green debt market. But there are actions happening, especially on the sovereign green bond fund, with India planning to launch one for about, I think, $2 billion. What's your expectation of this move driving interest from two sides, right? One is the global players investing, say the pension funds, and one is the local players, the big local players like LIC. So maybe for the local players, I can get in your viewpoint, the LICs of the world, when are they going to get into the action?
So I think a global sovereign bond definitely helps to set a benchmark, right? And hopefully it can be a long-term source of capital for the government, especially to assist the underprivileged or the MSME sector, which requires a lot more capital. And like Alan was saying, the corporate sector will have direct access. Now, coming back to the local sector, right? And like Lakshmi was mentioning, right? A mutual fund can't go ahead and hold a 100-year paper. But India is inherently a savings economy. I just mentioned there is $1 trillion of capital ready to be deployed in the next 10 years towards ESG initiatives. How do we pull that capital? For that, the participation of insurance companies, pension funds, provident funds is absolutely critical. We need to get the regulators, and cannot be just an RBI or a SEBI domain, but also the IRDA and the PFRDA together to say, how can we channelize this capital? And it is not just for philanthropic reason. In reality, an insurance company today needs to get worried about their portfolio diversification, because they are as exposed to climate risk as their investee companies is. So in my mind, it's a mitigant for them. The other thing, which I think we talked a lot about bonds, but possibly the one other area where we can attract capital is the loan capital market, because banks have such an important role to play, but banks' balance sheets are limited. So you need something like a CLO market, which Singapore has developed very well, where they've got a JV with Temasek, a fund which is ready to actually buy loans from the banks and then distribute it to institutional investors. And that is also protected from the vagaries of capital markets. So innovation is the other key.
Speaking about the impact on MSMEs, Alan, we have 65 million SMEs in India. They contribute 30% to the GDP. So in terms of the impact that it could have on this ecosystem when it comes to green financing, your thoughts on that?
Yes, you're absolutely right, Gautam. The large corporates will follow logic, regulation, and they'll get there. The issue is much more in the consumer market, which I no doubt we'll come to, in the agricultural market, and particularly, as you rightly say, the small and medium-sized enterprises, for whom this type of transformation is difficult, and access to capital for them is much more complicated. So Stan C is a fine lender to these organizations, but if you spoke to small businessmen, they'll say that it takes a long time to get loans. The paperwork is extremely onerous. The pricing is very high, and therefore these sorts of things are not done at the margin. So what we need to do is, recognizing that there are underlying risks, of course there are, we need to come up with ways of financing the transformation, which makes sense and is easy, relatively easy for the small business owner, but also makes sense for the banks. And as I said earlier on, I think digital has a large role to play here, because you can assess risk, you can monitor the asset, you can interfere with the asset. If, let's say, you were lending for a green vehicle and that vehicle was disappearing or being misused, you have the ability not just to find out where it is, but switch it off. And similarly with rooftop solar systems or anything else. So digital technology gives people insight into customer behavior, consumer behavior, industrial behavior, much better data on savings. So you can come up with ESCO models whereby you're saved, you get paid by the savings you achieve. And the credit can be properly modulated. But returning to the conversations about government balance sheets and risk, if we are to attract financial institutions from offshore, whether they be multilaterals or the private sector, then the application of governmental support to mitigating risk, both on the currency, as Lakshmi was saying, but also on the underlying pools of of risk capital, which these people are being offered in aggregate, I think would be a very, very productive use of government balance sheet.
All right. Bringing the conversation back to SMEs, Ankur, I mean, as Alan has said, considering now the channels of data have exponentially grown, it's giving you a richer understanding of risk when it comes to a lot of the MSMEs. So in that perspective, is that going to be a big opportunity, especially when it comes to green financing, because those POCs just keep building upon themselves, right?
Absolutely, Gautam. In fact, that is why banks are speaking to the RBI to see how some of the priority sector lending norms can be changed to further support green financing with MSMEs. The RBI has allowed possibly 30 crore kind of disbursement to renewable energy projects. Maybe the size needs to be increased. Maybe the scope of PSL needs to be widened, because there is a bit of moral suasion that you will need to do in the financial system to direct capital. And Alan did speak a lot about availability of capital. In my mind, what additionally is also required is non-financial support. So as the corporate India starts tackling scope 1 and scope 2 emissions, I think they will start also focusing on scope 3 emissions. And that is the time when they will have to look at their suppliers, their vendors. A large part of that is the MSME ecosystem. And the corporates will not have a choice but to actually work with these MSMEs to do technology transfer, to do skill development. Because while the government and the banking sector can provide capital, the technology and the skill part will come from their larger customers. And the combination of that is the only way to transform and provide stability to that sector.
All right. On that note, it's time to wrap up our discussion on accelerating green financing in India, the nuts and bolts, and we've covered the entire ecosystem play as part of the 6th season of Standard Chartered and CNBC-TV18 present India on the Move. I'd like to thank all of our panelists for sharing their insights on the topic. And of course, thank you to our viewers for tuning in. Till next time, this is your host, Gautam Srinivasan, signing off. Have a great day.
Standard Chartered and CNBC-TV18 present India on the Move, Season 6. Focus, ideate, innovate, enable.